flat. So let's invite our next guest on the show. Manishi Raychaudhuri of BNP Paribas Securities is with us. Hi Manishi, good morning and thanks for being with us on the show. Things have been quite volatile, for the lack of a better word. I mean, good days for the last 3 weeks, then a couple of slow days for us. But now, how do you think the month of October will shape up? Will it be as good as September, or are you cautious?
I think the critical variable to look at are the earnings estimates. We are now entering another earnings season, and I would expect some further downgrade in the earnings growth estimates that everyone has on the street. If you look at our own estimates or consensus, it seems to be forecasting something like 13 to 14% earnings growth, both for fiscal 2014 and 2015. But I think these numbers are unrealistic. I think both the analyst and investor community is possibly too complacent on even some of the so-called defensive sectors. I would think that even in consumer staples, which has been kind of a beacon of stability over the last few years, there would be some downgrades. You could see that in consumer discretionaries, you could see some of that in the public sector banks, and therefore, I would think that those 13 to 14% number would possibly gradually get down to upper single digits. And that is when the market would possibly be in a more realistic zone. So I would think the bias could turn out to be on the downside in the month of October.
Okay. Well, good morning, Manishi. Good to have you with us.
Hi.
One of the reasons why we got a reality check was because of that tapering talk and the money suddenly ebbing away. Do you think we are in for another rout like that when tapering begins? Or is tapering a much juiced out story, will come in a very innocuous fashion with 5 billion or something, and therefore it's not going to be that seismic event it was in July?
Well, you see, tapering has to happen at some point of time. What we have got with the last announcement by the Fed is a temporary reprieve. The good part is that I think this is now understood among the investing community at large, and therefore the exuberance that had been created in the Southeast Asian markets and in India prior to that announcement in May, that exuberance is not created right now. You saw a couple of days of up move after the postponement announcement, but that was that, and there was a sense of reality right after that, and all these so-called risky markets corrected after that. So I think the investor community also understands that the fundamental issues in these markets in terms of a high current account deficit, monetary and fiscal profligacy over the last several years, these issues are not yet behind us. There's several months, possibly even a few years of painful adjustment that many of these economies have to go through. And until and unless that happens, investors would not be rushing back into these, these so-called risky markets. In fact, I would think the danger is that if tapering of QE gets postponed even further, then the extent of tapering that the Fed would have to do may actually be accelerated from what was envisaged earlier. So I think it's perhaps better even for the US authorities to start tapering sometime by end of this year and or early next year. Our house forecast is that it would start sometime in sometime in the first quarter of 2014 with an initial tranche of 15 billion reduction from this current level of 85 billion that is being pumped in. So initially it would come down from 85 to 70 billion, and gradually by the end of 2014 or early 15 it would be wound up entirely.
Because of the concerns that you just alluded to, Manishi, and the fact that you believe this market is headed lower, do you think the bottom is not in place at those August lows of around 51, 5200?
Well, you see, the Indian market has been trading in a very narrow range. The whole of this year, in fact, right from around October, November last year, it's been trading in a 10 to 12% range. And I think, for the time being, that range possibly would be stuck to, it would be adhered to. So, on the Sensex, that range could be somewhere between 17,500 to 18,000 on the lower end. We have a target of about 17,000 by the end of this year. And if we do have a combination of earnings estimates coming down and the market drifting down to the lower end of the range that it has marked out for itself, then obviously that would provide a better platform for long-term investors to, to jump into the Indian equity market.
Manishi, so are you buying nothing at all at this juncture, since your logic is that we are going to get more attractive levels and probably for a sustained period?
You see, many investors don't have that luxury. There are India dedicated investors, even leaving aside the domestic investors who are obviously India dedicated. Even outside India you have quite a few India funds, and even emerging market or Asia ex-Japan funds have to allocate some portion of their inflows to India. Inflows have been rare to come by of late, by the way. But as a consequence of this, there's a certain core allocation that remains in India, and we are advocating that at the present point of time, capital preservation should be key. One should focus on the hiding places that India provides, and fortunately, India actually provides quite a few of these hiding places. These hiding places are in exporters, in the foreign currency earners, and in the relative defenses. Even within the high beta sectors, you have, let's say, some of the private sector banks, which have proved to be resilient. So that's really the universe that we are talking about: IT services, pharmaceuticals, a couple of auto and engineering names, and possibly some of the private sector banks very selectively.
But aren't you worried about that becoming an extremely crowded trade, Manishi? I mean, 9 out of 10 people on the street are advising you to continue putting your money into IT. How long do you think that could go on?
It is, I mean, you may be right, but if you look at the domestic and the foreign investors' positioning, and this is something we track very actively and very minutely, at least at the end of the month of June, and this data comes out quarterly, I think there were kind of neutralish to marginally overweight positions on the part of the FIIs and banks, while the domestic institutional investors were actually underweight banks. There were underweight positions across the board in IT services. It sounds very surprising, but if you look at the benchmark weight of IT, both in MSCI India and in some of the domestic indices, the FIIs and the domestic institutional investors were both underweight IT. Okay. So I think despite being a crowded trade, despite everyone talking about it, there's still some scope left for investors to increase their positioning in IT. I think on some of the other exporting sectors, there has been some position built up, like in pharmaceuticals. I think most investors are neutralish right now, both FIIs and DIIs. But for some of the other merchandise exporters, there is still some scope for increase in weight by the institutional investors.
Manishi, your